Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. Welcome back to Real Estate Investing Abundance. I'm your host, Dr. Alan, and thank you for joining us once again today. We're going to be taking a look at a mobile home park mogul, and he is going to be sharing with us his invaluable expertise. So, with an insatiable thirst for knowledge and a knack for uncovering hidden gems in the real estate market, Frank Rizzo has transformed his career into a dynamic journey of discovery and success. His unique ability to see value and opportunity where others see obstacles sets him apart. And fueled by unwavering persistence and relentless consistency, Frank turns visionary ideas into tangible realities, making him a standout figure in the industry. So welcome, Frank, to the show, and just give us a little bit of background about you, how you got started, and how it is you transformed from a typical working in residential real estate to mobile home park investing.
Well, thank you for that introduction, Alan. I appreciate the opportunity of being on your program. I've had a tremendous journey in real estate now that's over, it expands 3 decades and over 20 years of experience in it. And yes, I started as a residential real estate professional because that's the normal trajectory for most people who want to get into real estate. However, my focus and passion was always on deal and opportunities, right? Because for myself, while this was a pathway into real estate, the real wealth creation and the legacy building is through ownership, not through the transactional, buy and sell real estate. And to the course of that and evolving in terms of as an investment advisor and looking for opportunities for clients and helping people along their journey, I found my pathway into mobile home parks quite by accident. And quite frankly, by helping somebody else, with some of the challenges they were having with their portfolio in New York and how they were looking to retire down south, and assisting them in creating some dispositions of those properties, and then them being happy with what we've done and said, hey, I want you to find an income, something that could, supplement that income while I move down south. I stumbled across, mobile home park and mobile home park investing. And quite frankly, Alan, as somebody who grew up in the heart of New York City, grew up in Brooklyn, it's probably not the normal trajectory for somebody in real estate from New York City to find a path and find their success in mobile home park investing. But while I, in the course of my research and diligence on trying to find them an opportunity, I realized there was such a tremendous asset class that was just an undiscovered gem and something that had been kind of like, it wasn't something that people looked at, 10 years ago when we bought our first park. It was something that was kind of like almost like the redheaded stepchild, very mom and pop, very fragmented industry. And now that thesis has changed and you're starting to see, more capital find their way into the manufactured housing space because, quite frankly, it's the most affordable housing opportunities for people. We're providing a very much needed service in a market that's very much in demand and a very constrained supply of mobile home parks throughout the country. So we have this interesting dynamic that's happened. And, we've been fortunate to have been part of this, growth pattern over the last 10 years.
So if I understand you correctly, you started out as a real estate broker or sales agent. I don't know what they refer to it as in New York, but is that correct?
Correct. Yeah. I started out, not to date myself, but I first got my license when I was 19 years old. And back then, for the MLS and people wanted to find their inventory, they had to come into your office and you had to book and you had to show them the listings that were coming out. Then my journey kind of left real estate to come back in, right around 2003, where I was working with a developer and we were finding distressed opportunities. We got my real estate license and my broker's license from there, where we were finding, mostly foreclosure opportunities, maybe, homes that were just, needed repair, or land that needed to be redeveloped. And that's where our focus had been in the early 2000s.
So in taking that trajectory, you were actually working for a client and you moved into the mobile home park space. I'm thinking that probably in the city itself, is there such a thing as a mobile home park?
So as it would happen, there's one mobile home park in all of New York City. Happens to be in Staten Island, right?
Okay.
But that wasn't the park we looked at, right?
Yeah.
But it just happens to be one mobile home park. So, my exposure to it was very limited. So what had happened was, obviously working with a first generation, immigrant success story. And as an entrepreneur, he bought real estate as his, 401k or retirement. Mm-hmm. And as they were looking to leave, they needed help exiting the portfolio. Obviously, tax advantageous to do a 1031 exchange. So as we were exchanging out of the last properties, it was, hey, what do I buy down here that makes sense? Where can I, reinvest this money where I can, get an income? His family was starting to take a little bit more control over it, and I was trying to find something for them that they could plug and play. Mm-hmm. And I kind of walked into the manufactured housing space, and the father very much said to me, like, I'll only do this if you stay in the deal with me. So I had to kind of put my money where my mouth was and continue to manage his property from a distance. So that was kind of quite a learning experience for me, but an enjoyable one. And it just really stuck with me, Alan, that as we were able to help somebody, that helped me, right? Really advance my career and our pathway for the company my partner and I had founded.
Well, where was this first mobile home park?
We were focused in South Georgia at the time, in Warner Robins, which is a market probably about an hour and a half from the Georgia-Florida border. Okay. There's an Air Force base there. Great, small town. I mean, and we've seen in the last 11 years that we've done this, that a lot of these secondary or tertiary markets kind of see a renaissance or a rebirth in some of these markets that have had the right ingredients there. Warner Robins happened to have been one of them. And, in the last 10, 11 years, it's seen a huge growth in both the population, the economic demographics, and we started isolating other areas in the Sun Belt that we saw the same thing happening. And then I think the numbers have played out, especially over the last 5 years, where you could see the migration patterns from the west, from the north, kind of converging down into this region, which has made it a very dynamic place to invest capital, where you're seeing markets really start to see a renaissance in some of the cities and towns that we're in.
Yeah. Well, what are the aspects that you look for when buying a mobile home park? An existing park, you probably are going to go in there and kind of reinvent the whole structure. So what are some of the things that you're looking for?
That's a great question, Alan. I mean, for us, we're deep value add buyers. We typically buy from multi-generational properties. Maybe they don't have an exit plan. Maybe their children don't want to take, they're not operators per se. They might be owners, but they're not operators. So you've probably seen these properties that have had a prolonged period of disinvestment. And our niche has really been turning these trailer parks around into manufactured housing communities. And that's where we found our niche. So for us, we're more basis buyers in terms of what our total acquisition cost is to replace those lots in that market. We look for markets where there is stability, meaning that we don't like to buy as a catalyst. Like we expect, and we've all seen this happen in different areas where this project is supposed to lead to a boom. And a lot of times it does, and then there's many times that it doesn't. So we look for markets where there is a degree of stability there, whether that's diversity of income opportunities, whether that's military town, educational background that could become a buttress, so we can have some predictability. We look for opportunities in the community that we're buying, where if we make improvements, we can create some additional value for the in-place residents and then for the new people who are looking for affordable housing options. So that's been our like a deal matrix in terms of what we look for, and how we look to deliver value for our residents and for our stakeholders.
You used the term trailer park to mobile home park. What's a trailer park as opposed to a mobile home park?
So it's so funny because this industry, and a lot of times when you talk to people about the industry, they have a very bad connotation about what a mobile home park is, right? And so most people look at mobile home parks or trailer parks, and the representation that they have in their mind is a property that's run down, maybe trailers in there or homes in there that are dated, maybe some residents in there that are just kind of living without standards or rules and just kind of doing their own thing. We found that people who live in these communities, they love the aspect of community living, right? And they can always tell you about when that community itself was really at its apex. And for us, we like to transition, what's happened maybe over the last 20 or 30 years due to mismanagement, and turn it back into a community and the value of the community living that people aspire to. Because quite frankly, people like living in communities. They like the fact that, hey, I have my own space, I have my own home, I don't have somebody who's above me, I don't have somebody below me, but I also have some neighbors and I have a sense of community that's able to build. And I think that's very important. So we look to build on that and to build communities that we feel will be attraction for people inside that city at large.
So in the trailer park environment, as opposed to the mobile home park environment, in the trailer park, people are living next to one another and they have neighbors and what have you. Is there, in this trailer park environment, have they lost that sense of community? What's really going on there?
So I think the biggest thing that we find, Alan, is that the standards have to come from the ownership with management, right? So you have to create the culture in there, right? And if you have a culture where, you're not maintaining a certain sense of guidelines or rules or standards inside that community, then people will do, you might have somebody who thinks it's okay to put a couple of cars up on blocks, or somebody that thinks that it's okay to become a, junk collector on the outside, and they're just, they're collecting debris. Or what we found in many cases is that there might not have been a good screening process to bring in residents, right? Which, if you're a homeowner there, right, you own the home, Alan, but you don't own the land, that might be a problem for you, right? Because not everybody, you might have somebody that have just came out of, jail, and maybe they wouldn't be somebody that you'd want to be your neighbor, right? Because of their, background or criminal history. So I think an element that we try to bring in is we want to help create that community by raising the community standards. Like, this is, if you're going to be part of our community, this is what you can expect. This is what we're asking the residents to do, but this is what they can expect from us. We're going to make sure that it's clean, that the garbage is picked up, that the roads are paved, that the lights are on, and that it's safe and secure, right? And if you could do those things, which people sometimes take for granted, but if you could do those things, you can create, you could start the semblance of creating a culture and a community of accountability, and that's where we think we're adding a lot of value intrinsically for the people who are currently residents, and creating value for people who are looking for a place to call home.
Well, I live in North Carolina, and so it's easy to just to take a drive and drive by a whole lot of trailer parks, and occasionally, you do drive by a mobile home park, but there is a significant difference, and you can see that just from the outside driving by.
Sure.
Whether or not the owners are doing anything to improve the neighborhoods and the communities within them. And I think there's not always a whole lot of incentive from the owner's part, because I don't know, they've owned it for 20, 30 years, and their return on investment or their NOI is adequate for them and their needs, and so they don't care what the community is really like. Do you find that to be true?
I find that to be true many times, and I equate it for two, or three reasons, right? And I think, a lot of times, and what's unique about this asset class, a lot of times the way these communities were built, they were built because someone might have had had land that was attached, whether it was a farm or not. And so adding homes at different points in time was just, how do I create some additional income from the land? And there wasn't really a master plan in place, but it was more of a, this year I could put up 10 homes, next year I could put up 5, and it kind of evolved. And the ownership wasn't necessarily a real estate, looking at master development or a real estate owner operator from that standpoint. And then as it has gone down through the generations, family might move away, this one might, and so they haven't paid as much attention. And quite frankly, that happens in a lot of cases, in a lot of businesses we've all seen. So that, I don't think it's necessarily just in the MHP space, it's elsewhere. But my family has an expression, new broom sweeps clean, right? So sometimes somebody new comes in there with some new ideas of, hey, what can this place really be, right? And how can I meet a need inside this community and provide something that is of value and will attract people. And so that's where, and we've met many times where you're at the third generation and they don't want to own the park anymore. To them, it's not an enjoyment. It might have been something that they've had to work at since they were a kid, and they just grown tired of it. And so that's where we can come in, and I think that not only do we alleviate an issue for them, but quite frankly, there's residents that might be living in situations that they would rather it be improved. Mm-hmm. And we're willing to put in the time, energy, and effort to do that. And I think that's a key point to where we can fit a need.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Well, we are visiting today with Frank Rizzo, and he is with Stone Capital Investors, and you can find him at stonecapinv.com. So that's Stone, STONE, Cap, CAPINV.com. So, Frank, what would be some situations that you would just not be interested in taking on?
That's an interesting question. We've kind of prided ourselves, Alan, on taking on some of the projects that maybe other people have looked away from. We like to think that there's no bad real estate, there's only bad prices. But one thing I will tell you, some deals that have made us walk away from in the past, when you have a counterparty that is just, quite frankly, being deceitful or kind of shielding some things where you're getting an uncomfortable feeling that, hey, there's probably something more to this story and I can't put this all together. That to me is something where, we would back out of. And I'll give you an interesting point. We were in Georgia on a property that we liked. We were very interested, and the guy had in this space sometimes we call it like a hodgepodge. He had some RVs, he had some homes, he had some mobile homes, he was renting, he was doing this, he had this land, so that in itself is a lot to grab a handle of. But we were dealing with somebody on the other side who was constantly looking to change the deal, right? Like the terms would change, this would change. There was a part that was missing. He didn't really own those homes. They were financed. And at that point, as much as we wanted to take advantage of the opportunity and we wanted to buy, we just couldn't commit to taking on all those risks, because the moment you sign on the dotted line, all those unknowns become yours, right? So for us, if we can go through the process and we know what we're getting, we can underwrite and kind of make plans for it. And perfect example, recently we were in contract on a portfolio that another sponsor came in, he had it. Guy probably shouldn't have been a sponsor in the MHP space. Smart guy, just not an mobile home park operator. Told us the park was 85 units, or could be 85 units. The reality is there was 45. The second reality is that when you started looking at what it would take to get those units activated in today's zoning ordinance, it would never get to 85. It would be somewhere between 45 and 60, 60. And at that point, you can't make the numbers work, right? And so you have to be willing to say, hey, I'd love to do the deal, but I'm going to walk away because it's not what we anticipated it to be. So I think that to us would be the biggest thing for us, rather than saying, all right, if the homes need work, or if there's a bad, resident mix where maybe, certain things have taken over, but not getting the straight story and becoming too much of an unknown is we don't like to go into a situation not knowing what we don't know, right? Or think we know something and then that we don't know it. That could be the big issue for us, Alan.
Well, in the work I've done in mobile home parks, it seems to me there's always a lot of unknowns and a number of things that are oftentimes out of the owner's control. For instance, I was looking at a mobile home park. I think they had, 25 spaces. And it, like so many of the places around here, in fact, probably the majority, are on septic systems. Mm-hmm. And this septic system, the owner was really quite upfront about it. It was really to its max, to the point that they wouldn't allow the residents to have washing machines in their units, and there was no place for a repair field. What would you do with that? Would you pass on something like that, or?
Well, so what I would do with that first is go to the health, the county health department, and see here's the issue that you have, right? How do we create a solution for residents and get what we need to make it work, right? And then figure out what that cost would be, how realistic that would be in terms of planning. And then you have to go back to the seller and say, look, for this to work, right? Because quite frankly, if you're not going to provide washer and dryers in your units, right, there's a discount that you're going to have to get on whether you're renting or selling the homes, whatever the case may be. People want washers and dryers in their units or on site. And if you can't do that, well, how much is that going to impact me? And if that's going to impact me, then the only way I can make that up is on the purchase price. So, I think from what you did your due diligence on it, and you knew exactly that, hey, there's a problem. There's not enough drain fields here, and we don't have the land for it. So do we have to make this a smaller park, which you don't want to have to do. But if we're at capacity, can we do that? Or can we expand these field lines to be able to fit the needs of today's market? And that's where you have to go back to due diligence and figure out, what the county requirements are going to be to get to where you want it to be. And if it doesn't match up or it doesn't align, that's where you have to make a difficult decision to walk away, regardless of how good you think the deal looks like. Because those infrastructure issues could be very, very costly. And I think pretty much in line with what we discussed before about a deal we walked away from. I could put 85 lots. I just couldn't get septic to them. And then without septic, and so if I put the septic in, by the time I did the testing, it could have cost me over $100,000 in diligence. And I wasn't willing to expend that type of capital, not knowing, right, where that was going to be.
And the other thing with this particular park, it was also on private well, which was also at capacity. So a lot of issues there. Well, what was the biggest transformation that you have seen within the parks that you have worked with?
So, probably, Alan, one of the things I'm most proud of when we're talking about these transformations is I had a community, and this was like community 2 that we bought. My partner and I had bought. When we bought it from the bank, and this was actually right outside the Warner Robins market, so I went hard on the contract without even seeing. We just knew we were getting a great deal on it, for what we were getting, but it was a mess. I mean, literally, when we drove in the first time, there's a drug dealer with tattoos on half of his face, driving a bike to 5 trap houses in the park. So we knew we had we had a lot of people we had to get rid of to rebuild this community. We went from 29 residents down to 13, 5 trap houses. We got rid of the criminal element that was in there. And a year later, I'm there at the park. It was 14 months later, to be exact. I'm at the park, roads are paved, pared back the trees. We're starting to infill this park again with newer residents. And as I'm there, right, there's an ice cream truck driving the streets, right? And there's a whole gaggle of kids that's running after the ice cream truck. And listen, we're here and doing this because we want to profit from it. And that's, we want to see returns. We have stakeholders that need to get returns, and them being an economic benefit allows us to do it again. However, the feel-good aspect of what we're doing keeps driving me every day to come back to it, because when you see that transformation, and then the good people that were in that community who were trapped in their house are now outside, and the kids are chasing the ice cream truck, that's a feeling you can't get in everything that you do. And I think that's what really kind of hooked me when you talk about this is, I don't need to be focused on anything else. I need to be focused here, because that is real impact capitalism. You're having an impact for stakeholders, but you're having an impact on the people you're working on. And that to me is probably something that's more memorable than anything that I've done in the real estate industry.
Yeah. Well, it is rewarding when we can be involved in projects like that. I too, that's some of the most rewarding things that I have been involved in, is seeing crack house communities turn into communities where children are safe to be outside chasing ice cream trucks. Is there a size that's too small? Is there a size that's too large for your portfolios?
So that's a great question. We've as you go on, right, you start to realize that you get better economies of scale the larger the communities get. And when we started, you kind of wanted to aim small, miss small, right? So, but now we target communities that are at least 50 units or better, right? They have to be at least 50 units or better. We just are looking at a community right now that's about 270 units. So on the upside, we'll look at communities as long as the numbers make sense. We're comfortable. if it's if it's in a market where we are, we look to try to be in geographic hubs, and if we can fill in at 50 lots, we'll do that. Below that number, Alan, it just becomes a challenge, because by the time we want to manage it the way we want to operate it, we know that there's a cost to that. It's tough to drive down that cost on a 10 or 15 lot community, because we won't be able to operate it profitably, right, where it would make sense. Now, if I was there and I was on site, that's one thing. But being that we're not, we have to look at a little bit bigger size to get the economies of scales to make it work.
Yeah. Well, that makes perfect sense. Well, Frank, tell us about Stone Capital Investors. And most of our audience are passive investors. So tell us about opportunities for passive investors.
So Stone Capital Investors is the investment company that my partner Eric and I had founded, which is the gateway to these opportunities. We have a platform that we've been able to build out over the last 10 years. We've been involved in 24 communities, and we've had a number of exits. So we've gone full life cycle on probably about 10 of these communities right now. So we're actively now still looking to grow the portfolio and growing the platform. And we update our investors or potential investors regularly through our direct marketing on, whether it's the mhpexchange.com, where people could see some of the opportunities that we're involved in, and they can actually track the progress. We have a YouTube channel called Trailer Park Turnaround, where we kind of walk through the projects that we're doing, from sourcing the deal to walking the deal to finalizing the deal, and kind of give people an idea of what it takes to be a mobile home park owner operator. So, as opportunities do come up and people have questions, we're there to answer any questions that they may have. And we're happy to share, what we're doing on our platform.
And so where do they go to find you?
So you could go to our website at stonecapinv.com, and that gets directly to us. Or if they want more information about the mobile home park space, they could check out the mhpexchange.com, which shows opportunity, news, educational content as well.
Well, Frank, just one last question here. What changes have been taking place in the mobile home park space over the last several years, and how do you see the future for mobile home parks?
So that's a great question, Alan. I'll tell you, because in the last 3 or 4 years, we've seen a tremendous amount of new capital that have found their way into the MHP space. Not all of it, I think, has they've looked at a thesis, like, hey, I've got a captivated audience that's going to, on average, stay 17 and a half years. But they're missing that culture part. And I think that they've found in the last couple of years that bad operators is bad business. And if you just go in there and you raise rents and you don't create value, don't do anything, people will leave. And that will have a blowback effect, not just from a economic standpoint, but you'll start to see some regulatory standpoints come in there. So I think that's something that we have to be conscious of as an industry. I think that you are seeing some initiatives nationwide take hold because of that. But I think the future of the MHP space is bright, because I think we've gotten much better. Homes manufacturers have gotten a lot better in terms of the quality of the homes and the product that they're putting out there. And I think you have some new capital that's coming in with some fresh ideas, and there's some really good opportunities out there for people who need affordable housing options. So, at the crux of all this, Alan, and what makes this such a, opportune time to be in the MHP space is because we have an affordability crisis in this country that is not being met, and you cannot do it through traditional stick housing, right? It's just impossible to build where I could put out a brand new home for someone in our community at $59,000. That traditional home is $300,000 or more, right? Like and so there's a big difference, in price points, and we're filling that need. And I think that's something that's not going away over the next few years.
I would agree. It doesn't look like affordability is going to return to the stick-built housing for quite some time. Well, Frank, it's been wonderful having you. Thank you so much for being with us and sharing your insights. Enlightened investors, I know you had a wonderful time today, and thank you so much for being with us. Until we meet again, live abundantly, and we'll see you in the next episode. Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.